Hello students. In economic segment, in the previous video we had seen money and credit. This is the second video. In the first one we had seen barter system, the meaning, the problems associated with the barter system, and the problems how they gave rise to the existence of money, and which are the modern forms of money like currency, then check, demand deposits in the bank, and how money has solved the problems of barter system. And also we have seen two conditions, credit conditions, which made one's condition better off, another one's worse off. That's all depending on the timely provision of credit with less rate of interest, and absence of these two advantages made others conditions worse off. And banking activities also we had seen how banks provide loan for the people, even though the commercial banks, they don't print money, they provide loan. How they provide, these are all the things we had seen. So in the present video we will be understanding the different source of credit, formal and informal, which are the lenders come under formal sources and which are the lenders come under informal sources. Where is the rate of interest less, where the rate of interest is more, and why? And how many poor people they are getting loan from farmer sector, and how many rich people, what percentage of rich people they are getting loan from farmer sector, and terms of credit. Then SHGs, self-help groups, which provide an opportunity for the poor people to get the loan, and they also provide some opportunities to the rural women to discuss so many things, social, economic, and cultural, and domestic violence and all. So these are all the things we will be discussing in this video. Let us start now. Here we have to discuss terms of credit. Terms of credit means a set of conditions under which loan is given. So while we take loan, we discuss so many things like rate of interest, collateral, documentation requirement, and mode of repayment. These all together are called as terms of credit. So once again, terms of credit means a set of conditions in which loan is provided. So that terms are called as terms of credit. Conditions are called as terms of credit. So which includes rate of interest, collateral, documentation, and mode of repayment. So this is what terms of credit. So in which, the meaning of collateral, rate of interest, what percent of interest we have to pay every month or every year or quarterly or half yearly. So these are all the conditions we will be discussing while taking loan. And second one is collateral. Collateral means, lender may demand security against loans. Those are called as collateral. It is nothing but an asset. If borrower fails to repay the amount, then the lender has a right to sell the asset or collateral to obtain the payment. So this is what you call collateral. Documents, nothing but providing the documents of assets. And mode of repayment means, and what frequently you will be repaying the credit, means half yearly, yearly, monthly. So that depends on the borrower and the provider of the loan. So while we are taking loan, these things will be discussed. These are all called as terms of credit. There are two sources of credit. One is formal and informal. The formal sector comprises banks and cooperative societies. The informal sector includes money lenders, traders, employers, relatives and friends. Formal sector is supervised by RBI, and formal sector sources have to follow the rules and regulations while lending loan. Whereas in informal sector, it is nobody's control. That means naturally in farmer sector rate of interest will be more, whereas in farmer sector rate of interest will be fixed by RBI. That's the difference between farmer sector and informal sector. Once again, farmer sector is controlled by RBI, but there is no control here in informal sector. As we all know, in formal sector, rate of interest will be less, and informal sector, rate of interest is more. Actually, poor people have to take loan from farmer sector as there is less rate of interest. But unfortunately, what is happening in our country, you see there the data. 85% of loans taken by poor household in urban areas are from informal sources. If we compare this with the rich urban households, only 10% of their loans are from informal sources and 90% are from formal sources. See that rich people, they are going to get loan from formal sources, and poor households are getting majority of the loan from informal sector. That means poor people are providing more, are paying more interest, and they are getting loan from informal sector. The rich household are availing cheap credit from formal lenders, whereas the poor households have to pay large amount of borrowing. Now we have to discuss why rich people are getting loan from farmer sector and poor they are getting loan from informal sector. There are many reasons. Let us see. The first one, banks are not present everywhere in rural India. That's the main cause. Even in some case, if banks are present, it is more difficult to take loan than taking a loan from informal sources. Bank loan require proper documentation and collateral. Unfortunately, our poorer people, they don't have documents and collateral. The absence of collateral is one of the major reasons which prevents the poor from getting loan from banks. Informal lenders, such as money lenders, on the other hand, know the borrowers personally and hence often willing to give a loan without any collateral. That's the major reason for which the poor people are taking loan from informal sector. Now we have seen the reasons why poor people are getting loan from informal sector. To avoid the problem, nowadays self-help groups have been started in rural area. Let us see what is self-help group. In recent years, people have tried out some newer ways of providing loans to the poor. The idea is to organize rural poor, in particular women group, self-help group, and they are be pool their savings. SHG may be having 15 to 20 members, usually belong to one neighborhood, meet frequently and save between 25 to 100 rupees monthly or weekly. So these members can take loan from the group itself to meet their demands. Group charges interest to these loans, but this is still less than what the money lender charges. If the group is regular in saving, it becomes eligible for availing loan from the bank. So loan is sanctioned in the name of the group and is meant to create self-help, self-employment opportunities for the members. Helps borrowers to overcome the problem of lack of collateral. They can get timely loans for variety of purposes and at a reasonable rate of interest. The other advantage of SHG are they play a very important role in organized rural poor. It also helps women to become financially self-reliant. The regular meeting of group provide a platform in which they will be discussing various issues such as health, nutrition, domestic violence, etc. So self-help groups not only provides a loan for women, rural women, economically backward rural women, but also provide a platform to discuss various social and economic issues and even domestic violence also. So these are all the advantages of SHGs. So students, in this video, we have seen understood the terms of credit like mode of payment, rate of interest, collateral, documentation, etc. Then formal, informal source of credit. What is formal sources and what are informal sources and how it is different from one another. Which one is better? And even though the formal and informal sources of credit, if they don't provide loan for the poor people, what we have to do? That is what we have understood the role of self-help group in getting loan. And self-help groups not only helping rural women to take the loan and start their own economic activities, but also provide it's a platform to discuss various social, economic, and other issues. So these are all the advantages of SHGs. These are also we have discussed and understood. So that's all about money and credit. Thank you.